Iowa State Extension economist and crop market specialist Chad Hart is our corn and soybean market analyst this week. The U.S. soybean harvest is now more than 3/4 complete and on pace with the country's 5-year average. Corn harvest is 61% finished, just a point behind normal. Iowa, Nebraska, and Minnesota are among the states trailing their regular corn harvest paces, but Illinois and Indiana are further ahead than usual. Heavy rains moved through portions of the Midwest, including Iowa, Tuesday night into Wednesday. We started by asking about harvest progress there when we talked with Chad Thursday morning.
Harvest progress here in Iowa, it's been a slower harvest than we'd normally like to see. The rains through most of the late summer, early fall here did slow us down, but we're starting to catch back up. Over half the corn and soybean crop has now been brought in for harvest, and so when we look from a nationwide scale, we're about where we should be at this time.
Too early to get a sense on yields?
On the yields, we're seeing, I would say this, the discussion I've been having with farmers is as they look at the corn crop, a lot of them say it's a good one, even a great one, but not quite as strong as what they saw, say, for example, 2014. So, farmers are saying that they expect the USDA yields to come back a little bit. But as we look at the soybeans, the idea is that rain did help fill out those pods. We're definitely staring at a record yield here in Iowa for beans.
Let's start in soybeans as we look at both crops. Expectations of a record crop across the country. No real major harvest delays, and yet we've been able to put some money onto this market. Diagnose what's happening.
We have been able to add some money onto the soybean market, and it's been demand driven. I think when you're looking here, the key has been exports, and specifically exports into China. The idea is China has ramped up their purchases from the U.S. We're up about 25–30%. From China compared to last year, and so that's helping show that the demand is still there for soybeans, especially from the international marketplace. And when you look between corn and soybeans, soybeans has been the tighter crop where we haven't had as much storage buildup, and so this export pull continues to help push soybean prices higher.
With that tight storage concern, would you like to be a seller here for soybeans at all?
With soybeans, I'm not necessarily wanting to move them right away unless I have to, but as I look out, what that does offer is as we go into springtime, I think we could see a sizable pop in soybean prices, sort of like we did this past year if you think about it. It took a while for soybeans to get there, the soybean market for it to get its legs underneath itself. But once we got into March, April, May, we saw a good, strong run up in prices. And I think we're setting ourselves up for that again as I look into 2017.
Corn hasn't been quite as positive as soybeans, but are you encouraged at all by the good days that we have put in?
I am encouraged by the corn market because, again, when you're wrestling with a record crop, and in this case, you're talking about 15 billion bushels of production combined with what we've got in storage, we're sitting on over 16.5 billion bushels of corn coursing through the marketplace, and yet prices are holding in there. And again, it's because of the demand we've got for the crop. When you look at the livestock industries continuing to grow, that's helping build up feed demand. Ethanol continues to basically push forward at record levels. We've been seeing more enter into the sweetener market, and also exports again have been strong. When we look here, both corn and beans have seen a resurgence in that international demand. That bodes well for these markets as we look forward. The problem that we're having is just the large supplies, the record supplies, as you mentioned here, sort of overwhelming the market here at harvest time. Things do look better as we look out 6 to 9 months.
So you're thinking maybe wait on selling there as well?
Yep, I'm definitely looking to see if I can hold and store here. I know there's been a lot of discussion from farmers about, for example, using the marketing loan program to give themselves some cash flow now, but then be able to market the crop a little later. And so that's what a lot of farmers are exploring right now, is that they're looking to store the crop either on farm or commercially, try to target those higher prices as we look into springtime.
When we last talked in July, we talked about crop margins. You've updated those now for both 16-17 and 17-18. How do they compare?
When you're looking at 16-17, the issue had been when we looked compared to production costs, this crop had always been running behind. The thing that sort of saved us here this year is that extra production, those record yields that we're having now. That helped, one, lower our production cost per bushel, but it also gave us more bushels to sell. And so soybeans is actually coming in almost break even as we look at the 16 crop. Corn still a little bit below break even, but the whole is not nearly as bad as it once was. But looking forward into 17, the markets, while improving, are still showing prices that are below our production cost. And so the market knows we're still wrestling with a lot of supply. The market is reflecting the stronger demand, but it's just not strong enough to take us back to those break-even levels quite yet.
That corn-soybean margin is tighter next year, yes?
It is tighter. As we look here, it's looking better than it looked this time last year when we looked forward to the 16 crop. But it's still a point where farmers need to be still looking to control their costs, trying to, if you will, get the cost structure down to match the market prices that we've got.
Okay, we'll close out with this. We're almost through the discovery period for the harvest price option. What does it look like?
When we're looking at what we're seeing on the markets right now, the problem is they're almost where when we set the projected price for our crop insurance was. If you think back to it, the idea is for both corn and soybeans, you're looking at that February average on the harvest contracts to set the price, and then you look at the October average on those same contracts to finalize the price for crop insurance. Well, it's been sort of a wash. We've had a lot of movement of price in between, but the idea is we're basically back to where we started in terms of those futures market prices. So for those looking for a crop insurance payment, it means you'd have to suffer a yield loss to get there. Given the bumper crops that we're seeing, there are not going to be many farmers staring at that situation.